Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, we're going to have a look at Bitcoin in terms of where we are and where we're heading in the next few days, weeks and months. But before we do that, just a normal disclaimer. Please remember everything in this video is for educational purposes only and nothing in the video should be taken as financial advice. Please do your wider research before making any investment decisions. Okay, get your cups of tea, Snickers bars, Mars bars, whatever you want. Eyes on the screen. And let's get cracking. Today we're going to start off with the Fear and Greed Index. And as you can see on the screen, we went as low as 10 on the Crypto Fear and Greed Index down here. And since then, we seem to be moving up here. And if you look left on this chart, the last time we came to this level here, around the 10 mark, we had a big rally up. Then left to that, this was the middle of June 2019 when we had that big run up, and then to the left of that. So every time we reach these levels, we tend to have a big run up. This is the COVID-19 situation here before we had run up there. So we're seeing signs of some improvement. Now the question is this reflected in the charts? But before we have a look at the charts, we can have a look here that now the Fear and Greed Index is at 28. We have been as low as 21 in the last few days. Well, that was yesterday, where that was extreme fear. But as I say, we have been as low as 10. So we've gone from 10 to 28 now. So that means that we're moving in the right direction on this particular indicator. Moving on to the charts. In the last video, I drew this as a symmetrical triangle because we had this and we had a fake out. And we were waiting for a breakout in this region here. And that still hasn't come yet. This is on the 4-hourly chart, by the way. But if you redrew this chart, it turns into a bull flag. So we can expect sooner or later, with this type of a chart pattern, yes, we're coming into it from the upside here. So usually this would also be a continuation pattern where we would break to the downside as it's a continuation of where it's coming from. However, it is a bull flag and we do have quite a good probability that we could break to the upside. So only time will tell, but certainly this can be redrawn to a bull flag, which gives it a little bit more probability to break to the upside, in my opinion. So this is the short-term picture of exactly what's happening with Bitcoin. Now, if you look at these 2 points here, you can see that we've created a double bottom here. And what's interesting here is that we seem to have a lot of support at these low levels here. So at 30,000 here, we got a massive push back up. The bulls started buying in. So this was a very strong point of support to the point where it was pushed up very, very strongly to these levels here. And then when we tried to come back to these levels again, there was a huge amount of support that pushed the price back to these levels. And similarly, for this point here. So what we're really saying is that in this zone down here, there is a huge level of support where people are coming in and buying up all the Bitcoins that are being sold by the people selling into this market. What that tells me is that there isn't much appetite for the price to move lower than these levels here. Of course, the price can go down much further if it wanted to. And this is Bitcoin and everything and anything is possible. However, just the behavior in the chart here, the chart pattern, tells you that every time we come back into this zone here, there is a huge buy up of all the spare Bitcoins, which makes the price go much higher. And certainly in the last few days, when we reached these levels here, there was a very strong move to the upside, a $7,000 move within a couple of days. So there is a lot of strength at these levels here. If we moved on to the hash ribbons on the daily chart, then we got a buy signal here around about the 13th or 14th of May, which is what I showed you at that time. And I did say at the time that while the historical context of these buy signals on the hash ribbons are extremely accurate, in fact, they've all been accurate all through the 11 years of Bitcoin's history. So this is a very accurate predictor. But as I said at the time as well, that it doesn't mean that the price will now suddenly start shooting off. It has happened in the past where as soon as the signal came, we got a fall in the price first before we moved to the upside. And it may well prove to be the case this time as well. But certainly the buy signal is here. And as somebody in the comment section mentioned, with an eagle eye, he noticed that my settings on the hash ribbons are quite different to everybody else's. And I've set it at 27 days. Default setting on these is 30 days. So if you want to, you can set it to 30 days, in which case this signal hasn't happened yet. But I always give myself the head start knowing that this is about to happen or going to happen. And I always set this to 27 so that I can foresee the signal and its consequences. So you can set it to whatever you want. This is my setting and it's helped me over the years. And it helps me to make very good decisions with this because there are a lot of people, would you believe, who actually, as soon as they see the buy signal, they actually buy in, knowing that every time we've had this signal, that we've had substantial increases in the price of Bitcoin. You can see that when we move left here, when we got a buy signal here, in fact, we've got two buy signals there, and we moved up here, then this one over here, moving further left, another one here, and this one. So we've always had a rise in the price. And it's been very, very profitable for those who've been using these buy signals to trade. So certainly this buy signal would tell me that this is just a lull before the excitement that comes around the corner. Also in the last video, I showed you on the 4-hourly chart, the EMA ribbons, and we needed to get above these very tight ribbons here. And we seem to be struggling just to get above it. I think that once we get above this, we may have enough fuel to be able to get to this trend line and move forward to the upside. But certainly we're being held up by the EMA ribbons here. And many times we keep coming up but getting rejected and then trying again. There is also the possibility, of course, that once we try to get up and we fail like we did here, then there is another leg down here. If we don't succeed in getting above the ribbons here, we may have another leg down to these levels around about the 30, 31 to create a triple bottom with this here. So everything is possible. We've got to have a look at all possibilities. We've got to remain fluid and flexible in our approach and not let our emotions, we all want the price of Bitcoin to go up, but we have to look at what's in the chart and what's possible. And this is the kinds of things that I'm seeing here on the shorter term time frame. If we have a look at the larger time frame on the weekly side, I've been showing you this weekly exponential moving average. And although we haven't had in a bull market the bodies of the candle of the price action being below the 21 weekly exponential moving average, and this time, for the first time, we have had that. And this is the candle that's done it. However, in the last 3 weeks, these candles seem to be providing a little story. There seems to be indecision in the market. So what these long wicks are telling us on the upside is that there is a rejection of higher prices. However, similarly, we've got the long wicks at the bottom as well. So that's telling us there's a rejection of lower prices. So what we have is indecision. That is what it's really telling us. The market can't make up its mind which way to go. Is it up or is it down? And we've never had this scenario in the past, and only time will tell which way we'll go. However, just a little insight will tell you that the wicks at the top end are getting smaller and smaller, and the wicks on the bottom side are getting longer from these two to this one here. So maybe the momentum is shifting towards the upside. where there's more of a rejection of the downside than there is on the upside. That's just the candlestick patterns and the insight that you can get by just looking at them and seeing what the behavior is behind the candles. So for me, that looks a little bit on the bullish side in the short term, i.e. in the next few weeks at least. But will we have enough momentum to push ourselves above this level here? This is a critical level here, 48,000. And as I mentioned, the 48,000 is absolutely critical. And my view is that we're going to get pushed up to this level and then have a retreat before we move on and creating a double bottom here. And the reason why I say that is based on the Fibonacci retracements. So if you take the Fibonacci retracement from this previous high here at 59,000 and take it to the bottom here at 30,000, you can see quite clearly that at the 61.8 and 65%, which is the golden pocket, we're right at 48,200, this part here. So what it looks to me is that we're going to be coming up to the $48,000 level before we come back down. So the question is, how far down do we come from the 48 level? There is a very high degree of probability that we're going to get a correction at the $48,000 level. So if we do the reverse fibs here, from this low to the 48,200 level, we can expect the next leg down after 48,000 to be around about here, back to the 61.8 level, which is going to be these prices here, to 37,500 to 37,100. So this pocket here, there, before we turn around. So basically that's what I see in the charts here. In the next few weeks, we're going to be getting out of this malaise here to the 48,000, back down for a correction down to the 37,000 mark before we move on higher. Of course, the market can go much further than that, but as I've said, the indications and signs seem to be that we've bottomed out at these levels here. These seem to be bottoming out candles to me. This is not financial advice, and obviously do your wider research, but this is what I see, and I can just relay that to you from what I see. The log growth curves are showing quite an interesting little insight here. This would be quite bearish as far as I can see, because if you look at this level here, this is the 61.8 level here. The middle line is the 76.39 level. We do need to hold this line here. And if we look at it closely, you can see that we're just going below it here. So this is the weekly chart. So I'm hoping that this week, before this ends, below this line, so we need to get to around about the $36.50 mark just to get above this line here, to give us the platform to move higher. So keep an eye on this, very, very important. Sunday night, have a look at where this is. If it is below there, then we may have another little leg to go down further. But certainly these are indecision candles and they can go either way. We can see this a bit more clearer on the daily chart for the log growth curves, and that is that for the last few days, we've managed to keep above the 61.8 level here, but just recently today, we've fallen below it here. So will we recover back tomorrow before the candle for the weekly candle closes? So it's very critical that we actually look at this and see where we are on Monday morning, as it could determine where we go throughout the next week. If we have a look at the Fibonacci retracement from these levels here, where we started this massive rally up here, so that's the base there, around the 16,000 to 64,000 recent high. And again, it tells us where we've come to at the 61.8 level here, between 34 and 33,000. This is where we're getting stuck. And we keep getting a bounce from here. The next bounce would be at the 78.6 level at 26,000 here. But we haven't really gone anywhere close to that yet. Obviously, that doesn't mean that we won't go down there, but certainly there seems to be a lot of strength around these levels here, 33, 34,000. Which is giving us a lot of buying power to push the price back higher again. So this to me seems like a bottoming out, a bit like this here. This seemed like a bottoming out before we made this big move here. So will this prove to be the same thing as we make a big move up here? Only time will tell, but certainly it has the mirror image of this development over here. Now, quite a lot of people recently in the last week or so have started talking about this death cross that's about to happen over here. The white line here is the 50 daily moving average, and the green line is the 200 daily moving average. And in technical analysis, when the white line moves below the green line, i.e. the 50 goes below the 200, that is regarded as a death cross, and it usually marks the beginning of a bear market. And vice versa on the other side, when the 50 daily moving average, the white line, moves above it, like it did here, then that usually marks the beginning of a bull market. And obviously this played out here because we went on this charge up here. So what is the validity of this? Obviously it looks very, very close. If you look closely here, it looks imminent that this is going to happen. However, if we go back to the first cycle, you'll see that after the first peak that we got in the 2013 cycle, the 50 moving average, this white line here, came very, very close here to crossing the green line. But we averted it because we had a big bounce, as you can see there. So will we have the same thing again? Only time will tell, but certainly there is a danger, just like it was here in 2013, of the lines crossing. And before they crossed, obviously the price started falling down, which pushed the line close here. But the pickup in the rally was so strong that it averted this cross over here. And then that led to this big blow off top. Only time will tell whether this will repeat itself, but certainly, yes, the market looks very closely related to that over here, that we're about to have a cross, but a sudden surge in the price to the upside will turn this round. But certainly it's looking bearish on that front, and we have to be just honest and look at the facts in the charts and say it how it is. This is a possibility that it can be averted, but in all intents and purposes, it does look very strongly probable that we're going to cross this in the next few days, maybe a couple of weeks, depending on the price action, of course. What we always have to remember that in any chart with Bitcoin and the cryptocurrency and anything in the stock market, there will always be bullish factors and there will always be bearish factors at any given point. And what we have to do is to weigh up both of them and come to some sort of a conclusion. And I would say, in my opinion, at the moment, it's looking more than 50% that we are more than likely to go to the upside rather than the downside, where it is on many indicators touch and go, and only time will tell. But when we've had a look at the fear and greed index, that seems to be going up. The hash ribbons are telling us that we've got a buy signal there. The log growth curve's pushing to the downside in the short term. And this certainly tells us that there is a bearish pressure bearing down on the Bitcoin price. So I can understand the confusion out there, but certainly my stance is that I think this is a great opportunity, and I'm a net buyer at these levels. And should the price go down, well, that's fine, because I can see a very rosy picture in the long term. So when we get to these levels here, which is my target, 300,000, I think we're not going to care very much whether we buy at 30,000 or 25,000 or 20,000. I think these will become quite irrelevant when we reach these target levels of around 300,000. And we may regret not buying at these levels. So that's the way I see it. This is not financial advice. Everybody has to come to their own conclusions. But I can only tell you what I'm doing. Moving on to the Bitcoin miners, Marathon Digital Holdings in particular, we seem to be making higher highs and higher lows. So it looks like there's a little bit of a recovery taking place here. And certainly I've been accumulating and adding to my positions as much as I can because I have such a bullish view of the Bitcoin miners. And I know that a lot of people from the comments section have bought into Marathon. And obviously this is not financial advice, but certainly I'm expecting the price to go much, much higher. And these levels here present to me very, very good value at a very highly discounted price. The main thing to look out for here is that if you look left here, when the price broke out from this neckline here, we had a huge rise very, very quickly. And I'm talking about an 85% rise, and this is the daily chart. So within about 1, 2, 3, 4, 5, 6, 7 days, within 1 week, we had an 85% rise. So this is what's possible with Bitcoin. And if you look at the neckline and we extend it, guess where we're at? We're right at that neckline now. So should we break this neckline, and I'll just go a little bit closer, you can see we've got indecision candles, just like at Bitcoin. Should we break this neckline here, I think we'll go off to the races there. And certainly I'm expecting it to reach its recent all-time high of around about $57 mark here. And then there'll be another neckline there to break around here. But I am expecting a rejection here, possibly a cup and handle. So if you have a cup there and the handle, normally the handle would be around about 61.8% of the Fibonacci retracement. So certainly this is a very good buying opportunity with a view to selling around these levels and buying back at a lower level. So if you just have a look at this level here, the Fibonacci retracement here would take it from this level here to the neckline, and the 61.8 would bring it back to the $33 level here. This cup, and with the handle, would mean that the price would be coming back from around about the $57 mark, around down to the $33 mark here. Now, it may well be it doesn't come back to these levels, but certainly the fibs are the ones that are very critical when you look at these cup and handle patterns. So if it doesn't come to the 61.8, the safe bet would be, for me anyway, is to look at the 38.2 and the 50%. And that would bring it back down to $42 and $37. So my expectation is that from these levels here, we're going to have a very good run up of around about, if you look at the price increase from there to the recent high, there's going to be about 100% increase between that in a very short period of time, in my opinion. And then we're going to have a retracement back down to the $42 level or $37 level, or in the classic case where a cup and handle is, down to the $33 level. And there'll be opportunities to buy back at these levels here to accumulate more units. But that's my take on the Bitcoin miners. A similar story for RIOT. If you look here, again, similar story, a cup, a neckline, up move here. And certainly here, we seem to have broken the neckline in this particular case. So this would be a fantastic opportunity now to get in. This is not financial advice. Please do your wider research, but this is what I can see. And you can see from the charts clearly that it's broken the neckline. And this is what happens when it breaks the neckline. There's a rapid move to the upside. And if you're looking to buy into Marathon and RIOT and Hive blockchain and Argo blockchain, they're not available on your normal exchanges. The two that are available to buy for most people around the world are on the Etoro exchange, and that is for Marathon and RIOT blockchain. And if you wanted to buy these, you could use my affiliate link underneath any of my videos by clicking this partners link here with the Etoro and filling in the details here, which will give you access to buying Marathon and RIOT at 0 commissions. So when you get into Etoro, all you have to do is just type in Marathon Patent Group there. Cryptocurrency is available as well as other investments as well. So you'll have Marathon here, Mara, and then RIOT here as well. So it's very, very simple. All you have to do is if you want to buy, you press the buy button, and sell, press the sell button, and that's basically it. And very, very easy to negotiate if that's what you want to do. And if you want to support the channel, then please do remember to click the like button here and click the subscribe button, turn on the notification bell, and click this all. Moving on to Wisdom Bite for today. I know quite a lot of you like this, judging by the comments that you make, and it does provide a very different perspective, albeit it is related to Bitcoin in many indirect ways, in the sense that we all want to be successful in life, we all want to be financially secure, and this segment of the video gives us an insight into what we can do to work on ourselves to make us successful in the future. Now, as you know, I don't normally give financial advice, but for this Wisdom Bite, I will actually give financial advice in this portion. I myself have followed this advice for the last 25 years and have never regretted it. Now I just wanted to share this advice with you, and you may want to make some notes on this. Especially if you're young, you have to really decide how you want to live now versus how long you want to work in the future. What this means is that if you decide to spend everything you have now, you will have no choice but to work longer and harder later. Therefore, what you're doing really is you're investing in your financial future today for a better tomorrow. So this is the first point in financial advice. That is to invest in your financial future today for a better tomorrow. It really means delaying gratification today, so you'll have more for the future. As Wayne Dyer said, you don't get in life what you want, but what you are. And this will give you a choice to retire early and have more leisure time tomorrow. And this will help you to become who you are rather than what you want. And it's really all about the choices. You are where you are today because of all the choices and decisions and the options you have taken up to now. So what we have to do now, where we are today, is that we have to think about our tomorrow today to make a better tomorrow for us. My second piece of advice is to read the book called The Richest Man in Babylon by George Clason. I did a video on this particular book by giving you a review and insight into this book itself, which 25 years ago set me on a course to becoming what I am today. I would highly recommend this. And the general theme of the book is that what you do with what you have is more important than what you have. Think about this one, very important. What you do with what you have is more important than what you have. You can have $1 million and squander it, or you can utilize it in a much better way. Or you can have £100 and make it into £100,000, or you can have £100 and squander it. It's very important with what you do with what you have rather than what you have itself. And what this phrase does actually, for those philosophers out there, and there's many of you out there I know, judging by the comments that you make, this comment here will reveal your philosophy of life. It will reveal your attitude about what you think and the makeup of your character. It's a reflection of your mindset, your values, and your decision-making process. And always remember, your outer is always a reflection of your inner. Let me say that again. Your outer is always a reflection of your inner. You can't escape that. So these are the two pieces of financial advice I would give you for today. To invest in your financial future today for a better tomorrow, and to read this book, The Richest Man in Babylon, the essence of which says that what you do with what you have is more important than what you have. And by doing that, your outer is always a reflection of your inner. And that will determine how successful you are. And on a final note, I want to leave you with a few inspiring words, and that is, let other people lead small lives, but not you. Let everybody else cry over small hurts, but not you. Let everybody else argue over non-essentials of life, but not you. Let everybody else engage in anger and blame, but not you. Let everybody else wallow in the misery of their past, but not you. Oh no, you are a single-minded, well-oiled, success-driven machine, avoiding all the pitfalls of the 95% who cannot understand why they are going from side to side and backwards. As James Allen says, as a man thinketh, he shall be. As the saying is, you are what you eat, but similarly, you are also what you think. Okay, so we'll leave it there. Thank you very much indeed for watching. I hope you found this very useful. And if you did, please remember to like and subscribe and to turn on the notification bell. If you want to leave any comments, questions or suggestions, then please leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.